In this video, I show you 4 better ways to find the best support and resistance levels on your charts. And the big aha moment is that those better support and resistance levels have always been there on your charts, but you weren't able to see them before. Do you sometimes struggle using support and resistance levels on your charts? Are you unsure how to draw them? You don't really know if you're allowed to cut through candlestick bodies and wicks? You're not quite certain if you should take your support and resistance level off the charts when the price has broken it? And how far do you even look back when you're drawing your support and resistance levels? All of those problems and questions are very normal for traders. And the problem is that you are probably not fully trusting your levels. Many or probably even most traders will struggle using support and resistance because it's such a subjective tool. And there's no right or wrong when it comes to using support and resistance. So every trader will use it differently and every trader will give you different advice. This can introduce a lot of noise and inconsistencies into your trading. And this then leads to emotional issues when you're not fully confident into your tools. I've coached traders for almost 10 years now, and what I found is that once traders shift from subjective tools like hand-drawn support and resistance levels or trend lines to purely objective tools, their trading will improve and they will be able to trade with more confidence. Objective levels are levels that are the same for everyone. Every trader will look at the exact same price level on their charts, and there's no guesswork involved. Objective levels appear automatically on your charts or have always been there, but you weren't just seeing them before. So let's look at this chart together and let's try to find some support and resistance levels here. First, we draw them naturally. So here's a swing point, but it doesn't fully line up with here. Here's a swing point, but it doesn't line up with anywhere here. We have a swing point here, it's not super meaningful. Around here there seems to be some areas, but you can see they rarely line up. Here they do line up. Here seems to be something that we can actually line up with a few levels. And when we look at major swing point, which is usually the way to go for support and resistance, those are the levels which we end up with. And what I've seen, especially over the last few years, it seems like it becomes more and more complicated and harder to draw support and resistance levels that give you some good confluence. Not sure if it's because of more noise, maybe more algorithm trading that is messing up with the charts, but for whatever reason, and it doesn't really matter why, natural support and resistance levels seem to be harder to find. So instead of using those natural support and resistance levels, we might be able to find a few other ones, but I think this is all right. Let's try to look into our first tool, and I really love round numbers. I have seen a broker graphic a few years ago that showed that traders really cluster their orders, so buy and sell orders, take profit and stop loss orders around round numbers. I will show you how to set up this in a second. And you can even see it in financial media and news. Often those will talk about round numbers when a market is reaching a big significant number. Crypto markets are responding really, really well to round numbers as well. So we're going to indicators and let's type in round numbers. And there are a few ones here. I'm not sure which one is the best. We can just go with one that has the most users. So let's use this one. It has the most activations. And we're opening the settings. We don't need round numbers in 50 levels, so I will just quickly disable this. Quarter numbers, we just want to really focus on the big round numbers, which are the 00 round numbers. Make this a little bit thicker, and we want to increase this here to get enough numbers on our charts. And those are now the round numbers. So you can see we have a round number at 110, 109, 111, 112, 113, 107, 106, and so on and so forth. And let's see how this lines up now with our price action. You can see we are catching this top. We have some confluence here. We are catching this high. We're catching those highs. Here we have confluence. Here we have a little bit of overshooting, but good enough. We are catching this big level, which we have drawn also manually. We are catching this level. Here's some confluence. Here seems to be a little bit of a confluence, support and resistance again. We have a few more other confluence factors, right? We can see it here. Here we're catching quite a few ones. Here as well. Here as well, this level that we have drawn manually, we're catching. Here we have some break and retest, support becomes resistance. So I think overall it looks good at the first glance. We are catching probably most levels that we would have drawn manually as well. Here a few more, and this is the power of round numbers. You don't have to worry about where you draw them. There's no guesswork. Everybody is looking at the round numbers and everyone will have them on their charts. You just have to activate it once and then you will get it across all of your charts automatically, removing so much guesswork and leaving you only with the levels that are meaningful. Of course, not all levels will work. Not always will the price pay attention to a round number, but it's the same with support and resistance. Sometimes the market will respond to a support and resistance levels, other times it will not. You don't know in advance, and that is the beauty of those objective tools. They work from the get-go. You don't have to worry about how you draw them, and they work just as well as support and resistance. So I've now moved over to Ethereum, a crypto, and crypto is really well known for the respect it has for round numbers. And you can see when I just start drawing them in, how well this will really work. Of course, again, it will not catch all of the levels. Sometimes the market will not pay attention to a round number, but we want to find something that works most of the time. You will never find something that works all of the time, right? So that's what we're really after when we're using those zones. We're not using round numbers by itself. We are always using it in combination with other tools, other confluence factors, and support and round numbers are just one part of our toolkit that we're using. And you can see we're able to describe the price action really well once again using the round numbers. You can do this across all the different markets. Some markets may respond to round numbers better than others, and you will then get a feeling for if this is a good fit for your trading. No matter which trading book you read or which trading podcast you listen to, a trading journal will always be mentioned as the most important trading tool a trader needs to have. That's why we developed the Edgewonk Trading Journal. And currently we run a promotion. So for Tradeciety followers and fans, go to edgewonk.com, and when you buy your Edgewonk Trading Journal, use the discount code Tradeciety to get the biggest possible discount. The next tool and technique is especially worthwhile for intraday traders. And what we're doing is we're opening the settings here, or the indicators, and we type in previous day high and low. And I'm using this one. The creator is Josh Trades. Thank you for creating this indicator. We add it to the charts, and I'm just doing some small improvements here or adjustments. We can see it better. I make this green and I make this red, a little bit thicker. And that's all we need to do. And what this indicator does is that it plots the high and the low of yesterday's price action on your charts. So this high level here corresponds to this level. So this was Wednesday on a trading day. And now on Thursday, we get here the high of Wednesday. And this is the low of Wednesday. And we get that here as our red line here for the next day. So it's basically a channel that plots the high and the low of yesterday on your price charts. Why is this so helpful? First of all, it's 100% objective. Once again, there's no guesswork around it. There's no questioning if you should draw the levels there. It's automatically going to be there and there's no question about it. Second is that intraday traders pay a lot of attention to yesterday's highs and lows. The high and the low of a daily candlestick, which basically is what this does, is very, very important reference point for intraday traders across all markets. Scalpers, algorithms, all of those are referencing daily highs and lows in their trading. And we can use it in our trend trading as well. It's really, really helpful to understand the trend dynamics. So here on the left side, the market is in a downtrend clearly. On the right side, we are in an uptrend. But what is so fascinating about this tool is that in a downtrend, you will see that the market is continuously pushing into new daily lows, such as here. The market is pushing into a new daily low here. Here we are pushing into a daily high, but fascinatingly is that we are just rejecting the daily high. The market is not able to trade above the daily high, but it's immediately pushed back down. And we know that before this day, the market is already in a downtrending and bearish environment. So we could look for those rejections of a previous daily high and then use that to time our trades into the direction. And this gives you two different opportunities to use this indicator. First, you could look for a break and a retest here below a daily low. Here we have a break and retest. Here we have a break, very deep retest. Or we could use and look for those rejections into the daily high and then trade that on the downside. When we look here now to the right where we have the massive bullish trend, first let's look at how the market is rolling over. So here was a daily low and the market is failing to push below a daily low for probably the first time in this downtrend. And then on the next day we have a violent break above the daily high, which the market hasn't done in all of this downtrend before. As we can see, it's the first time here that the market is pushing into the daily high. And from then on, it's failing to reach the daily low. We have one rejection of the daily low and then a violent turnaround back into the bullish trend direction. And now we can see that the market is pushing into daily highs. We have a big pattern here, a big level, pushing into it, advancing higher here, advancing higher and advancing higher. When we look here, we have another rejection of a daily low. The market still wasn't able to reach any of the previous daily lows and especially wasn't able to trade below a daily low, which gives us again a very, very bullish outlook on this market. We have the rejection and then the turnaround. So once again, you could use that here also as a very good trigger point to look for bullish continuations in the uptrend that we have previously seen. And if you're not an intraday trader, instead of using the previous day high and low, you might also be able to use the previous week high and low, the previous month high and low. Those are all very, very important reference points on your charts that will help you understand the trend direction. You'll be able to see those moments when the market is rolling over from one into the other direction. You'll be able to find those rejections of daily highs and lows. And those are really, really valuable tools. Again, 100% objective. You don't have to worry about drawing those, and they will add a lot of value to your trading. Next, I want to take a look at a level tool that will help us find good targets, but also reversal points. And this is based on the volatility and the range. We open the indicator and we type in Kelner, and here are the Kelner channels. The Kelner channels are based on the ATR. I will tell you in a moment what this means. We open the settings. All we have to do is set and change the time frame to day, which then gives us the daily ATR and the daily Kelner channel, and we are leaving it here at 20, which means that the Kelner channel looks back at the last 20 days. So from today, roughly, probably somewhere around here. And then it looks in this period, how much has the price moved up and down? And then it calculates that average range. So assuming the price has moved 50 or let's say 100 points per day over the last 20 days, it then gives us this channel, which is then plotted 100 points to the downside and 100 points to the upside. And what you can expect is that the price will roughly stay inside of the Kelner channel for the most part. Of course, there can be outliers, but for the most part, you can expect that the price will stay inside of the channel because this is how much the price has moved in the past. So it's really, really great at giving you this volatility and this range indicator. And what you can see here is when the price is moving into the outer Kelner channel, very often you will see that the market is retracing back into the channel. Here we can see the move into the downside, into the lower Kelner channel. Here we have a little bit of a period where the market trades below the Kelner channel. But for the most part, when the price is hitting the Kelner channel, the market is retracing back, hitting it, retracing back, hitting it, retracing back. And what this then does for you and how you could use it is twofold. For example, let's assume you are a trend following trader and you are trading with the trend and you're looking for targets. The Kelner channel would be an excellent tool to look for your targets on your trend following trades, because you would not expect that the market moves a lot beyond the Kelner channel. Of course, there can be periods where you might miss a few points here and there, but most of the time this should give you very, very good target levels that you can test and that you can play around with. And again, everything that I'm showing you here is not meant to be used on its own. Use it in combination with your other strategy. Back test it first, demo trade it first to see how it goes. But this is a really great way of how you can have another objective tool in your toolbox that is really great for finding those target levels. And this in the middle is a moving average, by the way, so it can be used as a tiebreaker. When the price is below the moving average, you're in a bearish market. When it's above it, you're in a bullish market. So below, you're only looking for short opportunities, and then you can look for the Kelner channel as your target placements. So another really great tool that you could use in your toolbox instead of standard support and resistance, or as an add-on for your support and resistance. If you like this way of trading, make sure to check out my Ultimate Trading Program. It's a trading course where I summarized my 16 years of trading experience into a few hours worth of video content. But there's so much more than just videos. You receive support from me 7 days a week. Every day, when you have a question, you can reach out, ask me questions, and I will respond to you 7 days a week. The trading program here consists of a trading course. There are over 80 new videos that I've never shared anywhere else before. The mentoring part is included. We have regular live webinars, and you will also be part of a lively community of traders from all around the world. I'm not using other teachers, I'm not using other mentors. You will be able to interact with me always directly. You learn my day trading strategies, my swing trading strategies, and you can apply to all the different time frames. Whether you are a completely new trader or you already have some experience, the course will help you make the step to the next level. The course in this program helps to build up your trading knowledge step by step. Here's a rough outline of the course, and as I said, there are over 80 brand new videos, so there's a lot for you to learn, and you will learn my actual trading strategies. I have dozens and dozens of trade examples for you. I show you how to backtest it. I give you my exact price action entry rules, and I'll show you exactly how to trade and how to prepare your charts. We also currently have a discount running, so make sure to check the link in the video description. And now let's get back to the video. And the last tool is another favorite of mine. We go to indicator and we type in pivot, and then it's called pivot point standard. We open the settings here, and for the most part, I really just want to use the central pivot point. So everything labeled S and everything labeled R, we're gonna deselect, so we're only left with the P level. I give it black so we can see it easier in the video. Pivot point time frame, I like to use the daily, especially when we are on a lower time frame. And that's basically all we have to do here. And what you get is now the central pivot point. This is basically the average of the last price action day. So every day you get a new pivot point, and it looks back at the last day, and then it gives you an average. It is weighted a little bit different, so it's not weighted equal, daily high and low, open close, but it's a really helpful tool, and it works really well for trend trading. So when we look at this chart, what we see is that the market is clearly here in an uptrend. And in an uptrend, first of all, you will see that the pivot points are rising. So each pivot point, each new pivot point should be higher than the one before. Here we see that this is kind of changing, right? Now we have a pivot point that is below the previous one, and this tells us that the market dynamics are changing. So it's a good trend filter tool. Another great way of using it is for pullback trading. So when we zoom in here a little bit, is that we can see the market is often pulling back into the central pivot point and then moving higher, pulling back into it, moving higher, into it, higher. Of course, sometimes the market will not reach the pivot point, but that's totally fine. We're not looking for something that works 100%. We're just looking for something that works reasonably well, that is objective and can help us improve our charting here. So the pivot point's another great tool. If you're trading the higher time frames, consider going to the pivot point time frame setting and change it to the weekly. Then you will get a new pivot point every week based on the last week price action, and that is a good filter for your higher time frames. Again, 100% objective, really good tool. It's well used, and you don't have to worry about how you draw it. It's going to be there at your charts automatically, and you can remove one more uncertainty level from your trading.